Hey guys, welcome back to the channel, and we finished a little bit up today. SPY up 0.34%, Q's up 0.72%. You can see here, looking on a 15-minute chart, we've actually gapped up, reached new highs at 10 a.m, then turned around and finished on our lows. If you've been watching the channel new on Friday, I came in today 100% net short. I finished the day down a little bit, but stay to the end of this video. I'll let you know how I'm positioned going forward. So let's just go over and look at the heat map of today, and similar theme as of last week, just a bit mixed out there. No blanketed breadth to speak of. There was a little bit of a rotation into the growth sectors today. You can see tech, communications and cyclicals rose well. Healthcare, utilities and consumer defensive came off a little bit, but no big moves out there, just kind of like a mixed, almost flat day. With economic data, we did have durable goods come in a little bit worse than expected, and pending home sales actually came in surprisingly a bit better than expected month over month, still down 24% year over year. And I expect this is just, this is a bit of a lagging data from the low rates we've had, earlier, late last year. So the higher rates we've seen the last couple of weeks should affect this figure going forward. Okay, back over to the charts. Let's switch over to the daily here, and you can see we're just kind of sitting on this trend line on SPY, and Q's just sitting at their 50-bar VWAP. But we'll come back to that at the end of the video when I give my final analysis on the markets and how I'm positioned. So let's just keep moving forward. Switched over the international ETFs to the actual international indices that are not affected by the US dollar, so we can see how the indices are performing without having them affected by the US dollar, like the US listed ETFs. And so we're just looking at the FTSE in the UK, the Euro stocks, the ASX 200 from Australia, the Nikkei 225 from Japan, and the China 50. Which is trending down as well. Did have volatility 9-day pop up a little bit today, even though VIX 30-day fell back a little bit, but we're still holding above 20 here on the VIX level, and realized volatility is still low, just looking at a 3-day chart there. So we're just still sitting at this low level of volatility in the market, even though we're pulling back in a really kind of moderate lockstep fashion thus far. Put call ratio to sitting at 103. Breadth is still pretty low for the stocks above the 20-day average, although we've still got 43% of SP stocks above their 50-day. And stocks making new highs is still really low as well. So there's nothing, big strong bullish breadth to speak of. Over to the spread charts. They were up a little bit today, with growth cyclical sectors up a little bit, but still just kind of sitting there consolidating in a bit of a sideways pattern now. And the yield curve, the 10-year minus the 2-year, still at all-time lows, sitting down here. So the bond market's still saying it's a good chance of recession at some point in the next year or so. And we had high yield versus treasuries actually bounce a little bit today. Bonds actually came back a little bit today, still sitting up there at the top of their range. September Fed Fund futures actually increased marginally, and still they're sitting at quite an elevated level of 5.4% for September Fed Funds. December at 5.31. And bonds bounced a little bit. High yield just got a bit of back above its trend line there, and just sitting there at an interesting level with high yield. Dollar came off a little bit today. Wasn't a whole lot of action in the markets today. Kind of a bit of a slow Monday. Bitcoin just came off a little bit. Dr. Copper actually sitting at his trend line as well. Did have natty gas bounce. And over to the stock sectors. So we had clean energy up 2.3% today. Bots up 1.3%. We had financials flat, and the winner today was transports up 2.1%. And all the defensive sectors were actually off just a little bit as well. And this is not something you see in a bull market when even the defensive sectors are selling off. And typically when there's a rotation, even within a sideways or bull market, if there's a bit of a rotation is safer, you'd see these rally, but that's not a good sign for the market when you see even the defensive sectors in a bearish trend. BlackRock just sitting down there on its lows as well. Mega cap tech, nothing too exciting out there today, kind of just a real flat day. Although Tesla, we've had this trend line in here and it's bounced off it. The strength in this name is remarkable, even though it's bounced 120% off its lows in under 2 months. For a $600 billion company, even for Tesla, we all know how volatile Tesla is, but still up 5.4% today in a otherwise flat market. So that's kind of remarkable, its strength, and it's just not letting anyone that was hoping for a dip to get back in has just not been getting that chance. So the real test is when we come back up to this 215 level, whether we can take out this level here, or that proves to be resistance again. So we'll be watching that. Meme stocks, little mixed, but we did have Carvana up 11%, AMC up 22% with their earnings tomorrow. So meme crowd getting really excited for AMC's earnings tomorrow. We did have the Avatar release out, but they're still expected to lose 20 cents a share. So this thing just trades on pure sentiment, hype, liquidity. If you look at its quarterly earnings, it just keeps losing money. So it's just burning through cash and it's kept alive by hype. Not much else to report there today. It's kind of just a slow, flat day. Back over to the market. So I came in 100% short today. This is still just trading as a real weak, flat tape to me. I just get the feeling that it's just there could still be a flush around the corner. So as a technical trader, I've just got to trade what I see and trade the charts. It's not always right all the time. You kind of operate like a casino. A lot of small bets with a small edge that plays out over time. So I'm just trading what I see and what I feel. And so there's still a lot of bearish seasonality in this market. Typically late Feb going into early March is a bearish time. You can see on our seasonality forecast indicator, that's all negative for the next 5 bars, and even for the VIX is predicted to go up over the next 5 bars, typically at this time of year. And with this kind of flat, heavy tape, which is still sitting on its trend line here, I've kept it my portfolio 100% net short. So I'm short across a bunch of names: tech, software, internet, retail, casinos, and I'm still holding out for that flush and we get a proper down move, because the way we're trading and with rates, that's still the way I feel most comfortable to be positioned going forward. Okay, so that's all for today. Not much else to report. I'm sure things will get more spicy as the week goes on, and we'll talk about it. Thanks for watching, and I hope to see you again tomorrow.